The markets are getting no less interesting. We need to see what's going on for this week. I am Dr. Stock, Doctor of Education. And do you know why pigs don't like magicians? It is the constant sleight of ham. We're going to see what's going on with SPY, QQQ. We're also going to take a look at NVIDIA compared to QQQ because it's really super interesting right now. And then also SOFI, Tesla, and I'm going to also bring Intel back because there's something that I would like to mention about that, a possible catalyst that we have coming up. And we're going to have to see how that plays out for us. So, by the way, if you guys want to see how I'm playing this market and see my buys and sells, I'll tell you later about the Patreon options course and about how you can learn to do technical analysis like I do. In the meantime, just a few things about the market itself. Something that can affect the overall market on Wednesday. So tomorrow in the markets, GDP coming out at 830. I don't know that it's the largest catalyst other than if it comes in at this value, not so bad for us. A little softer, okay, maybe not so bad either. But coming in much hotter than this can actually push out those rate cuts from the Fed, which is kind of crazy because what we could see is strength coming from the consumer, but yet not slowing down like the Fed wants. So that could cause them to stay tighter for longer. And that is not a situation that the market wants to find itself in. So for GDP, we need to watch and see. Coming in around the consensus is going to be probably for the best for us. A little softer is actually still pretty darn bullish for the markets. At least allows it to hold steady, whereas a too high could be something that would be a weird mix of upward and downward pressure, downward where the Fed is concerned. But otherwise, some good numbers for us coming in. So we want to be watching for that catalyst from GDP on Wednesday. Then on Thursday, we have PCE and we also have jobless claims. And so the inflation measure that we get from this is the last PCE read that we get prior to the Fed meeting March 19th and 20th for the FOMC meeting that comes up next month. We need to be on the lookout for that. So keep an eye out for Thursday. We could see some downward pressure in the markets on Wednesday as a result of that. And that could be one of those potential catalysts that we have. And then we also have some Fed speeches that follow later in the day. So if we get higher than expected reads on that, which by the way, consensus coming in right now at about 0.4 over the previous 0.2, 0.3. So right now consensus are expected to be a little bit on the higher side, especially with what we got from CPI. We just want to be on the lookout for that. If that comes in softer, that's significant upward pressure for the markets. We want to see that come in. And then what we see for initial jobless claims can also influence that. A little bit of softening there could also be a good thing for the markets. Coming in extra tight, well below the 200,000 mark is going to be something that could be downward pressure for the markets. Just need to keep on watching for that. And then we have more Fed speeches to end the day on Thursday. And then on Friday, we have manufacturing data. And then we also have Michigan consumer sentiment, the final values for that. And then some more Fed speeches. So those Fed speeches, especially following the inflation report, are going to be huge, especially if we get a higher than expected read. That could be something that's rattlesome to the markets. Let's get over to the charts from there. So I'm going to bring that down and I'm going to put the charts up for you. And we're going to kick things off with SPY, still in the ascending wedge. Yesterday, softening a little bit, down about 0.37%. We want to see where we catch support on this thing. It is possible that we hit that trend line back down around the 500. So please keep on watching for that for SPY. If we head up to the upside on this thing, right now, the sky's pretty much the limit as long as we don't break down through the bottom trend line in this ascending wedge pattern that we have. And we don't actually meet on this thing until about 5:30. So we're going to be watching for that. And we have a fair amount of room to the upside on this. And there's still definitely room to the downside. We'll be watching for that. And that 50-day that's creeping up on us. We have the EMA and SMA pretty much matching each other right now, right at about 484. That would be one that should we pull back, I think that the two will come up. Well, the market will come down. The moving average will come up. They'll meet each other somewhere in the middle of those values. So we'll have to watch and see, should we get a pullback with what happens for that? And it also depends on the larger economic picture as well. Moving over to the Qs, I have the 4-hour chart, still in the ascending wedge pattern that we saw with SPY. But check out this look that we have here. Bit of a bull flag pattern being made up for us. And right now we have to watch and see, should we break the top trend line for confirmation at about 439, or should we break down through the bottom at about 435, 436? Now, when we go over to NVIDIA, which is a big player in that, we see a very similar formation happening right now. You could actually argue sort of a flag if you discount some of these wicks that are on here right across the top at about the 800 level. 800 is going to be important and huge for us. Breaking that allows us significant room to the upside. I have 850 marked. But should we break strongly to the upside, maybe it's off the GDP data, maybe we actually get some soft inflation numbers coming out for PCE, that could be something that could catalyze this and push it to the upside. We have had a significant run for NVIDIA. So just taking a look at that thing, it's been absolutely crazy and incredible to watch that happening. So should we fail to break 800, should we break down through the bottom of this trend line, that could send us back down, see that softening back down to 745. So it is possible to see 850 coming up in the near future. We're going to have to watch the trend lines. We're going to have to watch the markets. And I think that this is also going to dictate what happens with QQQ as we watch that. So I mentioned in SOFI, and for SOFI, we're actually breaking up above these two different trend lines that we have for this consolidation pattern. And so it's possible that SOFI, which right now in the pre-market hour is showing us about 871, it's possible we see well over $9 per share coming out of SOFI. So we want to watch and see. We have the first top coming out around 940 to 950. And then after that, we have room from 10 to 1050. So SOFI, pretty bullish on it right now, watching it break the top trend lines. This is something that could continue for us for a little while unless the market comes along and does something to change it. So the technicals looking bullish for SOFI. I have a long-term position in this, and I'm considering making an options play for a short-term trade on SOFI. Moving over to Tesla, the inverse or the head and shoulders pattern that I talked about, that should we fail to break this top trend line, instead break down through the bottom, didn't happen. We broke through the top of this, so I can get rid of these markings and we can take a look at where we go from here. So right now in the pre-market hours, we're up to almost 203. We could see that come out to about 207 to 210 before we finally start to find some significant resistance for Tesla. If we open up above 200 and we close above 200, like I said, we have room for about a 5% move still from beyond where we're at for Tesla. Let's move out to the daily charts just real quick on this so we can see where we're at. And 210 is actually right here is 208, and then above that 216 for those moving averages. So I think we could peekaboo over the 50-day that we have right here. We're up above the 13, we're up above the 5-day exponential moving averages. So I think we could peekaboo up above that, possibly see 210, maybe even 212, but I think 210 is a comfortable middle between 208 and 212 coming out of that. So should we see a continued move here, as I believe the market is searching for value? I think that Tesla is one of those places that the market is finding some of that value. And so it's going to be messing around with that stock price for a little bit. Breaking that top trend line is a bullish thing for us. Check the momentum. If you can see it down here in the bottom of the chart, just crossed up yesterday over the 50. And we'll see today if we can hold that. As of the pre-market hours, it's looking right now like we just might do that. So we'll see if we get a retest of support, followed by taking off from there. So also some bullish news looking for Tesla. Now for Intel, I said that has a bit of a head and shoulders look as we're looking, as a matter of fact, kind of a double-headed beast that we have here. However, we are also getting close to what looks like it could be a double bottom, and we have Biden's State of the Union address coming up, and with that could be infrastructure news, and also with the CHIPS Act, and the name drop of Intel being repeated this year like it was last year, could be something that could be a catalyst to the upside for Intel. So this is one I haven't taken a short position on this, I haven't taken a long position, but it's one that I am watching for what exactly we could see coming out of Intel over the next several days. So putting the chart back up there for the moment, what we're going to be watching for is this bottom trend line that's forming up right now that we seem to be trading right along this diagonal that we're hitting support. And then if I draw from the top of this thing where our resistance is at, actually, I'm not even a fan of that one. Let's massage this a little bit until we catch those tops just right. There we go. And we'll bring that in a little bit. Perfect. Bring that up a little bit. I do this kind of stuff all the time. Maybe I'm a little bit too much of a perfectionist for this. There we are. But there's the consolidation that we have for Intel, looking like around 43 to 44 is about right for right now for this consolidation. We want to watch which way that break goes. If we drop down through the bottom of this, that could be an opportunity for a swing back to the upside nearing that March 7th date. We're going to have to watch for that for, like I said, the State of the Union address coming out and possible news for Intel during that time. So something that I'm watching, something that I most definitely want to keep track of for Intel, because I think that there could be money to be made on both sides of it. Tesla, bullish on Tesla, long-term investor on Tesla, and it's one that we could possibly see some further upside really soon for them over the next several days, possibly giving us another 5% back would be absolutely glorious and beautiful. And maybe they actually get some love. Probably not, but maybe we can at least keep our fingers crossed. Legacy auto usually is favored, from what I understand, from the Biden administration. But we'll see if Tesla will get a name drop or infrastructure for that in the EV space. maybe possibly see a run up to that March 7th date. We're just going to have to watch and see. So overall take on the markets, still reason to be bullish, still reason to be cautious, and we definitely want to watch for the drop below the trend lines on the rising wedge patterns, because that could signal that we're going to take a slight pullback, if you will, a little bit of a bearish change. And that doesn't mean that what turns off the bull market side of things, but it could be something that would absolutely kind of allow some softening to come back. And actually, I think that would be a very healthy thing and allow for some really rampant upside to follow from that. So just something I want to look out for, so I'm going to continue watching for. NVIDIA, like I said, watch to see if we break 800 solidly. If we do, we have significant upside from there. A little bit more fuel to the fire, if you will. We could see that possibly this week with the economic data that's coming out. Should we fail to break 800, we could possibly settle back down to the mid 7s. So be on the lookout for that, and also know that it's probably going to take QQQ with it as well. And then SOFI, watch for that upside. Keep the overall market bias in mind, though, because that's something that as the markets sell off, SOFI could also sell off. And if the markets continue to pop, SOFI could also continue to pop. Same thing for Tesla and for Intel, although Tesla can actually move inverse to the market sometimes. So that's also something to be aware of and to watch. It's one that can be totally tricky and weird to try and play. All right, guys, I'm going to wrap things up here for you. If you guys want to see my buys and sells and see how I'm playing this market, get access to my Tesla and NVIDIA stock price prediction and earnings projection, you can find that over at the Patreon. That link's down in the description. And I also have my options course I'm building out over there. And if you want to learn to do technical analysis like I do, that link is also down in the description. I'm going to let you go for now. Thank you very much for watching. As always, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.